Aloha and welcome to Java. Thank you all kindly for joining me. It is September 20th, 2024. It's Friday. So, heading into this weekend, we've got quite a few things going on as far as the markets and the global economy today. So, I'll cover those. Hopefully, you'll go into a wonderful weekend. So, with this, let's get started. We've got the calendar for today is quite light, actually. The most significant thing, I believe, is Harker speaking at 2 o'clock, Fed president. So, what he says can move the markets a bit. Other than that, we're getting a few oil counts as well as gold and some speculative positions. So, something larger going on is we've got the triple witching going on. This is options expiration. I'll talk about that a little bit more in a minute. So, right now, we've got something coming out. The United States is awarding a $3 billion grant for electric vehicle battery production in 14 states. So, this is saying that they're trying to counter China. And really, on the back end, this is a political move. So, what I want to bring up is monetary and fiscal policy in the United States work in a combination now. One cranks on the faucet and floods out the money. The other just gets to decide where it flows to. So, understanding that this is partially politically motivated along with the timing, because the 14 states, for the most part, that they're funneling this money to are all what we call swing states, which could basically affect the vote that happens in November. So with this, they're pouring money into these states, basically trying to purchase more voting power, if you would. Now, EV battery production means nothing if they cannot get the supplies of the materials, the minerals, basically rare earth minerals needed to produce these. So with this, we're going to leave that for the moment. So we've got, want to go a little bit more into central banks and the macro view. Now we've got Bank of Japan holding their rate hikes. They were talking about this because their inflation was increasing. Now, since the Fed rate cut was so severe, basically that is weakening the US dollar. And when the US dollar gets so weak, it works like a seesaw. The Japanese yen is strengthening. So as they have more strength in their currency, it is bringing down their inflation. So they do not have to hike because the Fed cut on the other side with enough. So with this, they've got a lot of foreign investors selling Japanese equities. This is the stocks on yen jitters. So a little bit weak in their stock market, but it's not just that. It is the strengthening of their currency. Just like when the US, their dollar gets strong, the stocks will drop a bit. And I'm going to speak a little bit more about that in a moment as well, because we're at that point with the dollar strength to watch it. So with this, we've got the other central banks as far as Western currencies. Bank of England saying they should move slowly, then cut aggressively. Now playing again against the US dollar, they are basically gaining a bit of strength as well. So as the dollar goes down, it floats the others up. So with this, we've got the Bank of England and then ECB also saying that their easing pace and scope will depend on fresh data. Now, if that doesn't sound familiar, it's because that is exactly what the Federal Reserve said. Now, they work together. They say they don't, but we know that these central banks work together. They work in lockstep so that they get the desired effect, and they are all basically devaluing their currency is the point. Okay, so with this, we are going into our risk indicators rising. We've got more greed in the market, more retailers being pulled in, and these are sheep for the fleecing for the big money. So yesterday was good run day as we kind of expected on the following up with that rate cut. Today could be a different story toward the end of the day, not just with the triple witching, but with a couple of other items here. First off, the US 10-year yield and the relative strength of the dollar, which make up the larger components of the MMRI. Now, they have pulled back quite a bit they lost a lot of strength with the rate cuts, basically crushing the US dollar again. Now that made stocks green. We're still in the green at the moment. However, expecting a bit more volatility, futures are as well. The market smells all of these market options, and I'm going to speak a little bit more about this in a moment. But we're looking forward to basically high volatility, last hour of the day. This also corresponds with Harker speaking at 2 p.m. So basically, the expectation, highest probability, is crushing out in the markets and basically going weak into the weekend, if you will. Now, this sentiment, we've got the triple witching and market makers. Now, I wanted to bring this up because this large options expiration, basically, people are leveraging positions, if you're not familiar with options, and they pay on these contracts. Now, the market makers are those that get the orders for the buy and sell, and they have to match it up with the buying and selling on the other side. Well, they can affect pricing by choosing when they want to settle these orders. So they purposefully, and this is their job, create the volatility towards the end of the day on days like this so that they can bounce out both the longs and the shorts. That way they don't have to pay out either side. Now, how do you know the maximum number of buyers and sellers? If you have a particular option, I highly recommend visiting this site. It's called MaxPain. Now, this is a maximum pain for options. What it does, it gives you that price that would basically bounce out both the longs and the shorts. So that gives you an idea of where they're trying to price that at. Because at maximum pain, that means they would make the most money. So visit that. You can put your ticker in there if you're not familiar with it already. So with this, I call this the clearinghouse volatility. Do your own research. This is not financial advice, but just an eye-opener as to what you can look at so that you can protect your positions. Okay, now we've got, along with these, we've got cryptocurrencies. Total value of the transactions in Hong Kong increasing by 85.6%. Now we've also got what we're calling the Korean premium, basically another, like the yen carry trade, there is a premium on crypto there. So people are purchasing crypto on other exchanges and selling it there. So this is just showing the distortion of all of these asset classes. So we've got cryptocurrencies up above 63,000, really bullish on Bitcoin at the moment. Could be a bit of a pullback for both that and silver slightly. But once they set those levels, very bullish for both in the long term. So with these easing, we've got investors looking for places that will store their wealth. So some investors want to bring this up, looking at the gold-silver ratio. Now, this is the price of gold divided by the price of silver. Many invest if the ratio is above 80. Right now, it's at 84. Gold skyrocketed, of course, on the dollar getting weak and fear of basically this devaluing currency. So with the silver, basically is at a quite a good place as far as value historically. The historical ratio is closer to 18 or 16 to 1, if that gives you an idea. Okay, moving forward, because we've still got quite a bit. So now, recession still worries the stock market, veteran, despite the Fed's rate cut. Now, the market versus the economy are completely unrelated now. So this statement, of course, we're still heading into a recession. How deep is not assured yet. We're watching the job and employment market, and the stock market is based more on the devaluing of the US dollar. So I hope all of this gives you a better idea of why these things are moving the way that they are, and will keep you from being surprised in stock market moves, at least as much as possible. So now we've got the Fed more concerned about the labor market. Jay Powell is talking about, he's basically covering for the public so that there isn't a stock market panic, is what this boils down to. So we've got stocks faltering as the euphoria over the Fed rate cut fades. That's for a few reasons, but as I was saying, looking a little bit more for weakness today as far as the futures are saying. So probably opening still with some strength, heading towards green is what the probabilities appear to be, and then some volatility and possibly down toward the end of the day as these all get cleared out. Now going into the weekend, if it falls too much, that also is an opener for some events, and I mean geopolitical on the war front or otherwise, to distract from this. So caution on that. Now we've got the busiest United States trade hub handled near record imports in August. This is a problem. Record imports in August, we've already got major trade deficits, basically not paying this back. So this is another distortion that is happening with the currency. But now that we've got devaluing currencies, they're going to be able to pay these back with basically deflated dollars. So they've been pushing this off, and this is going to basically ripple out. This is how we export our inflation globally. So we're making the rest of the world pay for basically all of the inflation back in the United States. Okay, so we've got the politics of payment fees. Why am I bringing this up? Future of interchange. Talking about merchant card networks payments. This is all on rate hikes also. Now, the rate cuts this time. So now cuts will not necessarily bring these down. The interchange, these are cuts for the banks. What they pass on as far as fees are to the consumers. Now, these payment forms, they are looking at moving to cryptocurrencies, and this is going to be a push to accept these different payment methods and payment systems. The systems, much more important at the time, looking at cryptocurrency CBDCs in particular, and moving forward with that. So with this, we've got Germany seizing 47 crypto exchanges tied to an underground economy. Basically, the story on the cover is that they're trying to go after criminals. But these are all centralized exchanges. So all of the KYC, all of this, they're saying they're tracking them now. This is why there is a push to go decentralized. There is a new one called Drift. There are some other things going on in this space. We will begin more. We had to speak about this yesterday in Discord on Thursdays for cryptocurrency and decentralization in particular. So with this, we've got 23andMe. Most of the board resigned. Now they're the DNA testing company. Why do I have this here? Because we go into a CBDC, they're going to be tying this to biometrics. And what I am suspecting is this company moving forward. One of the most important data out there is your personal data. So I'm expecting this to be purchased because they've got a massive amount of DNA data now. We'll watch that forward. We've got the United States threatening Russia with new oil sanctions. They are laughing all the way to the bank because the more sanctions we put on, the more money they make. This basically justifies them, particularly going into winter, to raise their prices. So they're still selling to Europe just through third parties. What this will do is crush Europe, Germany in particular. So we've got this coming out from the Navy. United States Navy top officer prepping the service for war with China. Now, we're not prepping for talks. We're not prepping for anything else. This is assured we are going to war. Chief of Naval Operations seeking to have the Navy ready for war with China by 2027. This is a wake-up call for where we're headed. And I just want to bring up this last one. North Korea is bolstering nuclear and conventional weapons after testing two types of missiles. So the two types are basically one designed to carry super large conventional warhead and the other likely nuclear. So this is where he gets his nickname of Rocket Man, because always testing these missiles, looking to gain more power. But we are in a war economy. We are very tense circumstance if you haven't noticed, but we've got Asia heating up along with the Middle East and all of these other things going on. So with this, I have a question to pose to you, because a lot of this push is for more control, because we need to make sure that you're not a dark player, terrorist, or what else. So with this, I wish you all a wonderful Friday, great weekend. Thank you all for all you've done. And until I see you again, my friends, stay free.